E for marketwizards.com and eminigwizard.com, reminding traders to use risk capital you can afford to lose. It's the 24th of October, 2019, and it's just about 11 o'clock. Okay, so we're talking with James about um, the sell bar, a 30-minute sell bar, and targets and confluence, and he's basically got the right idea. So we're going to talk about that again just for a few minutes. And these are the hardest trades in the book. For you're going to leave chips on the table, especially if you're conservative. And we look at levels and we look at moving averages to help give us clues, and we look at patterns. So some of the patterns, first of all, we identified this very specific bar pre-market as our assumed support bar until broken. We also said, unless we've got violations, and the idea today would be to try to buy a pullback. Now, if you are a normal trader using our convenient trade idea of, okay, we'd said 15.5 should be our first resistance. So if you're thinking, and we said convenient trade, try to get back and see if we can get back into that 10 area. And then if we can do that, look to see if you can get to the 08s. And then the gravy part below 08, try to close the gap. 9.5 was our half gap trade, done deal. And then try to get yourself to the 6 to 5.5 if you've got a trailer, if you're working south side. And then be very careful, and hopefully, if you have any luck at all, you can do a double bottom test, we said, at that 275. Just test these. So in my opinion, the good fortune, really good fortune part is taking out the lows and going sub these lows. And we identified this very specific bar, this little doji here yesterday afternoon, as the key to keep this propped up. And one reason is because that bar represents basically the middle, this 98.75 right here, as an important idea. So now we can move back. We've defended this territory. Now we can say, yes, maybe we can get a bounce to retest the 05s, the 6 area, which is basically the gap. And then above that, the good fortune part right now. So this megaphone pattern that we've seen, we can see that idea. We can see the idea of mid support, got a hold. And then obviously down here is also a key where this launch came from late yesterday. So this is like a Z pattern. If this low holds and then we come back in towards the middle, and that's a megaphone pattern, we call that. And typically it's a bearish formation, higher highs, lower lows. And so for anybody that understands this pattern, you can take one more whack at it, but you can't be too aggressive today either. So our charts have helped us, all the different charts that we've looked at, including a bigger, like a 15-minute RTH. You can see how stretched we are still. Move it back to our 5, which is our base chart. And we can see the importance of trying to hold the pivot point and trying to hold the rain line and stay up here. So is this bearish? Well, not necessarily, but it's one of the best pullbacks we have had, certainly when they've thrown it up into the air like this. And today, remembering that 1475 to 15.25, 15.5 T1 area, very important idea. And that's the psychology in trading is understanding, you know what, Yesterday we'd said they had knocked out this low and just made the minor low a couple points. What if they do the same thing above here? So be very careful. They could just do that, get to the 16 zone, and then bang, and do the same thing. And sure enough, that's what they did. So you try to remember ideas like that from one day to the next. And you try to understand the very specific bars that you are looking at to help you with that idea. And that's what I think most traders cannot do. And they cannot use the psychology idea that we use. And they don't even think those things. And then, okay, let's just buy. Let's just buy. Whoa, and then they're in trouble. You know, this was pure and simple a great head fake early, all on low volume nonsense. And then the truth comes out. There's your megaphone. And then the truth comes out where someplace in the middle is where harmony will be found. Thank you, James. So your idea is a good one, but I submit that you cannot possibly wait for a 30-minute bar to close and say, okay, now we can short. For a day trader, it's just too long. You've got to be reacting. Here's your first 5 minute. This is the trap right here. Your first 5 minute bar. Bang. That's your demon right there. All right. Here's your demon. And okay. Anybody who is chase. We said, don't, be very careful. Charlie's going to chase today. And this is not a value trade compared to yesterday when we said buy in the 82s to 85s and then buy the 92s to 95s. It's nowhere near the same value. And that's why most traders get beat, is because they're always chasing at the highs or chasing at the lows the wrong way. So this is no man's land right in here. 5.5 to 6, the gap area. And then 08, which we said would be a key as well. And that's the area that we opened today, 775. And that also represents last week's high. So can we get the V bounce? Maybe, but at first things first. You got to get a little bit of a head of steam up and come back into this no man's land. And that's why I said paid for sure, with the understanding that this doji bar right there is our key. Said that early today, that will be our key, and probably 02s, 02 to 98. Still is. So this is where Charlie says, okay, now we got a down day. And Charlie, guess what Charlie likes to do? Charlie likes, okay, we got him. We're going short. Breakdown. And we'd said, timing says, come back the other way. So it's all about the levels and the timing. Anybody that's got something in their pocket, lock it. Coming into 06 to 775. And that's the middle of our angel and demon at 07. And that is what we call the Z pattern. Shake out, and come back to the middle. Marginal low, October 8th. I'll take a look at that, Kyle. I will take a look. We'll do that one. Anyways, hope you got something out of this swing. I know you left some chips on the table. We all do in these type of moves, but you try to sense where a setup will come from. And I submit to you that the charts that we are using help. Just understanding the nature of this beast coming back to our rain line. And then profit taking swing is going to cause a bounce. Yeah. Well, you know what? You're not going to catch everything. You're happy to catch parts of these moves. Am I right? So it's timing. It's when is one side ready to take some profits? And I submit to you that with the stuff we're using, we have a pretty good idea of location and the timing of it. And this is where rookies get caught. Okay, come on, we're coming all the way back down here. Just like yesterday, right? I'm heading to the pool. I'm saying, guys, pay for sure. Gotta be paid by 92s. Come on. That's your double. Look at here. There's not much energy below here. 92s, right? That was our RTH chart. They have a loading zone. Yeah, that was our loading zone. Boy, I said, no, we got you already. And they squeeze until your eyeballs come out up here. And then Charlie says, yeah, let's get them. And that's when they pull it back. So Charlie is always fighting the market. And Charlie is you and me most times, truth be told. You have to go sideline, sit, think about it, and say, who's trapped? What are they trying to do? Green, red, blue. You get down here, oh my God, how lucky did we get? Not how much more can we get? How lucky did we get? That's the key in this business.